Here is hoping that you've had a great Labor Day. And for those who live in Colorado, they are, they should be having a phenomenal Labor Day because are you ready? They can basically get a Model 3 for free for 3 years. Yep, it's true. This is from spotted_model. Do you know somebody in Colorado? Do you live in Colorado? Let me know in the comments below. You should let them know. He says, breaking, I've just cracked the code. $0 a month lease from Tesla. This is on their website in Colorado on a new rear-wheel drive Model 3 in Colorado. Note this does not include, this does include gas savings. But without the gas savings, the monthly price goes to, I know, it's going to break your heart, $33 a month. 6 lattes. Can anybody beat a 0 a month loan? Well, apparently, this is only just a little bit better than a Nissan Leaf at $19 a month. So, Colorado, this is a good deal. You can buy these EV cars in Colorado for cheap, virtually free. This is from Elon Musk. He says this weekend, the xAI team brought their Colossus 100K H100 training cluster online. From start to finish, this was done in 122 days, basically 4 months. Colossus is the most powerful AI training system in the world. Moreover, it will double in size to 200,000 of these. When it doubles in size, it'll be 200,000. At that point, it'll be 50,000 H200s, adding to the 100K H100s, which will give it a doubling in its capacity in a few months. He says, excellent work by the team. NVIDIA, our main partner, our many partners and suppliers, in addition to NVIDIA, of course. Well, this is Randy Kirk. Like, subscribe, notify, all that stuff. And then there's Patreon, of course. Now, let's take a look at next week. If the numbers come in, this is crazy. If the numbers come in the way the street is expecting, I'm going to go through this with you now. There's at least a chance this will be seen as too good. So it could start to rattle the markets a little bit with regard to the Fed cutting the rates, which is still the 16th, I believe, if I got it right now. I had it wrong. I was telling you guys that it was going to be on the 11th or 12th. I guess it's the 18th. Wednesday the 18th. Well, today's the 2nd, 3rd, 4th, and for 18th. So the decision day is the 18th, 2 weeks from this Wednesday. So a lot can happen in those 2 weeks. And that would mean the numbers, if true, well, what we're seeing here is the economy's stronger, at least, again, if these numbers are true. We don't know. These are only the estimates, and they can be off. So let's go ahead and take a look. So Tuesday, we start off with S&P final U.S. manufacturing. This is the Purchasing Managers Managing Index. Now, this is a final. This is something we've seen preliminary numbers earlier. Now, these will be the final numbers, and they were at 48, and they're suspecting they're going to stay at 48. All right. So this is, again, PMI for manufacturing under 50 means not doing great, but this will be staying even with where it's been and what's been expected. Construction spending comes in then after that. This was down 0.3% last month. They're expecting it to be down 0.1%. Okay, you can say, well, that's still down, okay, but it's actually up. Do you see what I'm saying? In other words, it's not going down as fast. So that can be seen as improving. Then there's the ISM Manufacturing Index, and that is last month was at 46.8%. Again, 50% being good. This is, they're expecting that to go up, still under 50%, but improving at 47.9. So as you can see, these three would not be exactly the kind of things to say, oh, we're going into recession or we're already in recession. Now, I just spent a few minutes with you this morning going over some reporting that said, hey, 43% of all the signals are saying that we are already in or going into recession. But you gotta stay on top of the numbers as they come out, because that could change pretty radically in a short period of time. I've seen it many times over the years where the economy has turned on a dime and been shocking people from one month or quarter to the next. All right, so next thing we got is on Wednesday, we start off with the U.S. trade deficit. Last month, that was a negative 73 billion. The numbers they're expecting right now would be a positive 79 billion. Again, a very strong switch to, and again, we won't know until we actually see the numbers, but that is suggesting either that imports dropped a lot or that exports improved a lot. So not sure exactly what to make of that, but we'll see on Wednesday. Then you've got job openings. They were at 8. This is the, this tells you how many jobs are available. This has come down all the way from about 11 to 12 million during the COVID. It's dropped down last month to 8.18. Now they're saying it dropped down a little bit more to 8.1. Now that would, again, I would not consider that to be like, oh man, we're in trouble now. I do question these job openings, whether they're really strong job openings. We're just hearing too much about how difficult it is right now to get a job. But now look at this next one, factory orders. This was negative 3.3% last month, went down by 3.3% last month. They're expecting it to go up by 4.9% this month. Now, where is that number coming from? What are we seeing that would turn factory orders around that much in a single month? But again, not very suggestive of the Fed needing to move. 2 o'clock that afternoon, so I guess, we could talk about it with Jeff. When I say that's 2 o'clock Eastern time, so 11 o'clock my time, California time. So the Fed Beige Book comes out. And so we'll talk about that with Jeff. And of course, during the week, we'll be hearing some of the auto sales numbers come in. Some of them came in today, but we'll be seeing more tomorrow and the next day. Okay, then we've got at Thursday, we get the ADP employment numbers. Now, last month, those were up 122,000. That was considered to be a soft month. Right now, they are not projecting. They're not predicting. For some reason, they're not willing to tell us what they think. And also, because it is Thursday, as every week, we get the initial jobless claims. They're predicting those to be down. Instead of 231 last month, they're expecting to be 225. So again, this would be positive directionality. Yeah. Then you got the productivity numbers. This is the one I care about the most. Well, maybe the second. Anyway, way up there at the top, U.S. productivity was at 2.3%. Not fantastic. I was hoping for a lot better. I've been looking for this number to go up a lot. And last year in the third quarter, it was really strong. Fourth quarter, not so great. I mean, not as great, but fine. But now they're saying this will go up from 2.3 on the last reading, because these are revisions of the second quarter reading. They're saying it'll be 2.4%. That's not a big change, but it's directionally positive. Now, again, this is rearview mirror, so that won't affect, I don't think it'll affect the Fed as much. Then you got S&P final U.S. services PMI coming in on Thursday, and that was at 55.2 last month, which is strong. And again, for some reason, they're not giving us what they think is going to happen in this particular one. They couldn't get people to commit, I guess. I don't know. Couldn't get enough people to give them an answer. I'm not sure how that works. Okay, ISM services. That index last month was at 51.4. That is suggesting to go down to 51. Again, a directionally, that would be good news for the Fed to see services slowing down a little more, getting a little more, on the soft side, but not a huge change. And maybe, this is only an estimate again. We'll have to wait and see what really happens. Okay, then we get to Friday. Of course, Friday is the big day. That's when in this particular case, that's when the numbers that really matter come out. So what do we get on Friday? We get the U.S. employment report. Last month, we had 114,000, which is a really lousy number. And that was what kind of got everybody thinking, okay, looks like we're going to have those cuts now. This time they're saying it'll be back up to 162,000. Remember, in this particular case, this is all about the revisions. Is that 114,000 the real number? Maybe this is one of those odd times when that number was low and they'll add 30 or 40,000. Who knows? 162,000, if it comes out, do we trust it? Can we have any reason to trust it at this point? Maybe it's really 110,000. So as important as this report is, and as much as everybody will be paying attention to it, we can't trust it because of all the revisions. But then we have the other 880,000 that were revised for the year. So even if they revise it every month, and then they revise it the second month from the prior 2 months, then we get to revise it again. It'll be 6 months from now before we'll find out what was really happening now. Okay, well, the U.S. unemployment rate, now that is a separate survey that does not get changed because it's a phone survey to consumers or to households. It's called the household survey. It was at 4.3%. Last month, people are saying that is going to, the estimate here is that it will drop to 4.2%. Again, directionally, the kind of thing that might get the Fed to say, do we really need to lower those rates yet? I don't know what to tell you because there's more. U.S. hourly wages, 0.2% last month. That's 2.5. That would be right on the Fed's numbers. Everything great. Oh, yes. But they're saying, we don't know. We have to see what happens on Friday. They're saying it's going to come in at 0.3%, which would be a 3.6, annualized rate. That would be way too hot for the Fed. And then hourly wages year over year, last month was 3.6. They're saying it's going to come in at 3.8. Way too hot for the Fed, especially in wages, because that's the thing the Fed is very worried about is expectations with regard to wage increases. Then we got a couple of Fed speakers speaking after that, which could be interesting as they digest. Now, again, these numbers could be completely wrong and they can come in completely different. And then no matter what, the Fed's having speakers that afternoon, right after those numbers, very interesting, could have an impact on the markets. All right. So where are the numbers as we go into Tuesday trading? Where are we sitting right now? Okay, we'll start with the bond market, of course. And what we've got going on there is we have, we got to refresh it here. Okay, does it not start till 4:30? I thought for sure. I'm sorry, it would be 7:30 your time, or East Coast time rather, 4:30 my time. Well, I thought that was already going to be in place. Boy, they keep messing me up on that. I'm very sorry. So let's go into the oil, which we know we've got. And what we've got happening on oil is really shocking. You've got Brent all the way back down to 76.73. You've got Texas Intermediate all the way down to 73.59. So this is rather surprising. They're saying there's a big buildup of oil domestically. Prospect of higher OPEC supply coming. All things that are knocking the oil market way down. Could we get a 6 handle? Maybe. I don't know. We'll find out what happens. Natural gas up actually 2.35 in the pre-market at 2,177. We have got gold slipping. No, it says right here that gold is slipping on a firm dollar, but the reality is it must have slipped forward because gold is up 190 or 0.08%. 25.29, way off of its all-time high, I think around 2,555, I think. It's my recollection. Silver is under 30 again, strong, coming down 0.9 at 28.88, and copper down 0.59 at 4.18. Okay, then you got the dollar. I always report this. I'm not sure anybody cares, but unchanged against the yen, slightly down against the euro, very slightly down. What's happening with Bitcoin? I know some of you care about that. And we've got Bitcoin still under 60 at 59,277. That is up 858 for the day. And then on the equities, we have got the Dow down 72 or 0.17. We've got the S&P unchanged, down 3 or 0.05. The NASDAQ also 0.9 down or 0.05 down. So all three down and the Dow down more. This will be after, what we're hearing right now is there's going to be maybe this continued rotation. Maybe there will, maybe there won't. Maybe it's going to go back in the direction of the Magnificent Seven and the tech stocks. But the suggestion is we should be looking for rotation at this point. All right. So Brian White, earlier today, we did a show. What we talked about was Norway as a harbinger. I think I said that right. As a harbinger of the future in terms of directionality with EVs. They are now at 97% EVs last month. And what do you call it? Tesla got 18.7% of the overall market in Norway. We need to have that in the United States. 19% of the overall market would be over 3 million vehicles just in the US. That would be good, huh? All right. And then we also talked about the semi-truck, the EV infrastructure for the semi-trucks being rolled out. The US government, what they're doing with that, how that's going to impact Tesla. All right, you want to see that? I put the card right up there. And then Patreon. It's been a good 10 days since anybody enrolled in Patreon to help the channel. If that seems like something that you should do, I will I'll announce you tomorrow. I'll let people know that you were a cool enough person to help out the old man on Patreon. Hey, it's been great talking to you.